Hello, this is George with the Harmony Trading System, and I'm coming to you to do the market analysis for June the 7th, tomorrow, Tuesday. So let's get this party started. We are going to go into gold initially and take a look at some of the levels that we were talking about. And this is a follow through of yesterday analysis, and we will be doing daily analysis of the market and multiple future market, including gold, ES, NQ, YM, and others. So what we're seeing in gold is a continuation of channel number two. So channel number one established itself in and around 429, and channel number two established itself recently, June the 3rd. And today we had that retest of the middle of the range and of Friday range, and the market continued to push into Globex and actually traded under Globex for that night. So what do we expect to happen? As we discussed in the prior analysis, we are going to be experiencing some price action that's going to start drifting lower in gold, and potentially we can hit a couple of levels. One of them is 1837. Second level is going to be the low of 6-1, which is going to be 1830. Then you're going to experience a potential target number two at 1826. So what happened when we get there? When we get there, we this area right here is a good support area. So as we approach that, some buyers are going to be stepping in and try to protect that price action. Ultimately, the longs, in order for them to look legitimate and establish an upward momentum, we do have to break that high at 1880. If we do that, then that breakout can threaten 1948, and the cloud can shift from the negative cloud that we are in to a positive one, and we can start seeing momentum on the upside. Right now, this market is exhibiting a classical short behavior, and we need to kind of monitor price action to the downside. So that's that on that one. Let's take a look. ES. If that is not a meat grinder on the daily, I don't know what else. But we have seen this before. This is not the first time that we see this. Let's take a look, because right here, see that little behavior right here? Where did we see that again? Look at that. And what did the market do after that? It flash sold. That is a classic stair step behavior. And you could see from that high that we established on March 29th onward, the market made a run up, consolidated, and sold off, consolidated, sold off, tried to hit the transitional zone and sold off. Now we're coming into the middle of the range, and we're exhibiting behavior very similar to what we saw in the March behavior. So we are expecting a bit of a drop into target number one that could take us to 4,056. Prior to that happening, obviously you got a couple of stops that you need to go through. One of them is 4098. Then you go into that double bottom at 4076. Then you go to target number one at 4056. So what happens if we hit that? It may not be a one fell swoop of a massive down day. It may be consolidation, breakdown, and a stair step behavior. But we can see prices that could go down below 4,000, and then you retesting these lows. And at that point, the buyers need to really show the fortitude to hold the prices and give us a bid that protects us from these lows. The targets on the swing trade indicator are massive, and I mean it, massive. Target number one, and they're reflecting volatility. So target number one is 4056. Target number two, 3742. Target number three, 3428 half. And I don't want to even talk about target number four and five, because that is just like again, it's Armageddon price levels. I mean, I don't see us getting to the 1859, but you be ready for anything and everything, and never assume that the market is not capable of surprising me, you, and everybody else. So, but for the short term behavior, the shorts are in charge of this type of behavior. We identified something similar to it that just happened here, and we may experience that drop. Ultimately, if the longs want to prove all of us wrong, they will have to break within a day or so. They have to break that 4204. Then at that point, we need to draw the channels, and we have channel number one is right here, and this is channel number two. And that by doing that, they're breaking channel number two, and price action can start to have an upward momentum into this entry point, and change the cloud from negative cloud to a positive, and stabilize up in these levels and start to migrate higher. We have a lot of bad news in the market. We have inflation. We have gas prices at high levels. I mean, there's a lot of bad news in the market, but that is news that we know, and we just have to kind of be ready and not surprised if the market rallies and shoot up past that point. But I would like to see the market prove itself. And right now, the shorts are in charge, and the surprise will be going above 4,200. That would surprise everybody. So the next couple of days into this week, this consolidation will resolve itself one way or another. I'd rather be on the short side. I'll take the short side before taking the long. Any short that I have in these levels have a target of 40.56, and a low, another target of 4,000 and 39.78, and the stop to the whole rotation is going to be in the 4200 on a swing trade basis. But obviously we can stop ourselves a lot earlier intraday if things do not look right. So that's the plan for ES. What is this? Okay, crude oil. I mean, can we stop this massive run up? I mean, it wasn't as much as we experienced March the 7th, but off you go. We have a transitional zone. Every time we come up to the transitional zone, price runs up. So right here, price is running up again after touching that level and running up. All this is a behavior that is consistent with a long trend. Uh, However, what we're seeing here of a reversal, this looks exhaustive, and I would not be surprised if we see another leg down in crude oil below 20 into the 15 area, 15, 16 area in a day or two. This is very exhaustive in the way the price behave. And it could be exhaustive and still be in an upward trend, and still see a general direction of higher prices, but have a minor correction within that trend. And that minor correction could be another opportunity for buyers to reload as we approach the highs and potentially break them. The environment that we are in right now, the war in Ukraine, and supply issues, there's no top to this price action. The geopolitical environment needs to change in order for us to see prices to go down and stay down. And right now, what led to price action going higher, those reasons remain intact. So as far as price action, right now we opened up Globex at 119.37. Uh, the next level that we need to see how the price reacts to is 117.66. And then let's call whole numbers here. 116 or 117. Then we got to look at 115 half, and then you are touching the transitional zone in and around 114. So those are the levels that I would be watching for. right now I don't want to be long crude oil just because of the exhaustive behavior that we're seeing in those three candles where you literally gapped up and then closed lower. And now you have a price action that's lower than that open. So you're gapped up, sold, and now you're gapping down a little bit right now. So as long as we continue to trade under 120.69, uh, I'd rather be short than long in this environment, and that will be for a short-term retracement before we get into levels that are buyable again. So it's kind of tricky here. I mean, you could pass on the short and just wait for the market to sell off a little bit before you jump back in and buy crude oil. That would be a safer bet. And let's see how tomorrow will play out. Now, YM was a lot stronger today than NQ, but the weight of the retracement that we faced pretty much took a lot of these indices down with it. And we literally went to that tick on this channel and retraced all the way back down to a close below Globex. And the market then stabilized toward the end of the day. So that was significant in the way it's behaving. That's the same meat grinder that we saw in other indices. And what's next for it is we have such a pronounced topping behavior at these levels that I rather be short in YM than long. I would rather be short in NQ than be short YM because YM is exhibiting a bigger or a higher degree of strength than that index NQ. So, what are some of the levels that I'm looking for on the downside? We're looking at 32,771, and then the next level is going to be 32,533. Then we're going to be hitting target number one at that point, 32,358. And, if you want to dream bigger, you have this level here at 32,073. Then you're going to have to test this level at 31,500. And then you got target number two of this sequence, and that is 30,755. I'm going to get tongue tied just mentioning all these numbers over and over. But target number two is that. Target number three, 29,152. And then, how big you want to dream. You want to go all the way to 24,343, 21,137. I don't think we'll get there, but those are system generated. And as long as we have an aura cloud that is negative and we continue to protect channel number two of that behavior, then the potential for a drawdown into those lower levels is significant and high probability event. Now, you always look for the surprise. How does that surprise look like? If we end up hitting anywhere above 33,071, I am worried. If 33,240 start showing up, that's a reversal here. And we're back at the testing of that declining channel and channel number two. And then a burst above it can get us to a cloud that is positive. Then you get a consolidation in this general area, and higher prices can be a big possibility at that time. And you could retest that declining channel, but in the process of doing that, you could stabilize and start pushing higher. I rather be short than long. My orientation in the trading room as we trade in NQ and other instruments is to look to be more aggressive on the short side than the long side against these higher levels where the market had a very distinct trouble piercing and trading above them in any meaningful way. Okay, a lot of traders would look at this and say, "Oh, this is a bull flag." Ah, a bull flag it needs to be a bull flag in an upward momentum, in an upward channel, not a bull flag in a declining price action. So just gotta be careful, some of the terminology that's out there. This is a weak behavior, but I'm looking out for how the market would surprise me, and That's how it would surprise me. All right. So that is it. Let's take a look at some of the economic news that we have lined up for tomorrow. And we talked about that in our prior analysis on Sunday. And we talked about how Thursday and Friday is more important than any other day during this week. We really didn't get much of any news coming in. Tomorrow, Tuesday, you have Treasury. Oh, here we go. That's a new one. Treasury Secretary Yellen speaks, and that is a 9 a.m. Piece of news, and we will be paying attention to that one. Um, and you got some European and Japanese news here that is not as important to us in the U.S. And Wednesday, not much of anything, but we have crude oil inventory report at 9:30, and here we go. Thursday. Thursday, you got all this European market news. ECB press conference is important. Unemployment in it claims is looking at 205, and that is a piece of news that the market is always moves the market. And that's 7:30 in the morning Central Time. And let's see, Friday, you got CPI, core CPI, and consumer sentiment. So that's the new thing that we're going to be watching for tomorrow. Treasury Secretary Yellen at 9 o'clock. You may get a price mover. All right, what else is out there? Let's take a look at how we ended up today. Yep. Here we go. All right, so today we went through 11 decisions. We stopped in the room at 10:44 at negative 35.41 and ended up just adding a little bit of profit and ended up about negative 508. It was a little bit of a rough price action in the morning, took a bit of heat and a drawdown, but recovered. And the best trade of the day for me was this trade right here. Let's take a look. Yeah, right here. All right. So that market where we experienced a captain set up short 60 up. Oh, yeah, that was beautiful. Captain set up short on the 100 NT ring. We could not have asked for anything better than that. Once the market did this little number, we got busy and we got short and we added to that short as the price went lower. And then we extended our targets. And I think one of the targets that we had was 70 points, and we actually hit that target. So we got short here on this captain setup short. The market did one more candle. We held on through that noise and added one more trade on the switch trade. So that's a captain setup short, a switch trade, and a captain setup short on the 200 on the 100 NT Rinko. So whenever you have the market consistently telling you the same thing in multiple ways on multiple charts, yeah, it's time to go. So I didn't even get that heavy. Two contracts here, two contracts here, and I took target number one, took target number two, took target number three, and that's how that went. And actually ended up this thing producing a whole lot bigger move, but consolidated, went down, and here I started to get busy, and that's after the room closed. But we could take a look at it. Yeah, that's a $1,400 trade. Five contracts here. We took three here and two right there, and actually one here and one here. All right. So what did we do? Yeah, the market turned positive. 200 and 100 were in sync. I went long, covered for a scalp, went long again, covered for a scalp. 480, 480. So it comes quick when you are in the right side of the market. Five contracts went short and covered the 10 right here. We made 1,000 on that decision. Let's enlarge this. Yeah, here we go. Then we took on a trade and we went short, 2, 2, and covered before the market sold off. Needed to protect myself, and negative 427. So we ended up, improving drastically from the earlier price action, and that's how we ended up today. All right, and that's it for me. So that is it for the analysis for the market for morning. We'll be posting this on YouTube, and also if you have any questions or have any suggestion on other instrument or other indices that you like us to review in our analysis, let us know. And uh, remember, precision is a decision in trading, and we will see you on the next one. Have a good one.